And I don't know if you have sound going. And that music and this time means that we are live here on YouTube, Tackle Trading's daily halftime report. And we've got Coach Mark, Coach Tim, and Coach Cody here to bring the market analysis to you here today on a Monday morning, 6/24/2019. First of all, Mark, I hope your weekend was very enjoyable. Cody, I was making fun of you for drafting a kicker there in our fantasy football draft as the first kicker off the board.
Hey.
Mark came in and supported you. I don't know what's going on here.
I mean, when Mark and I are on the same page and getting along, all is well in the world.
Yep.
Listen,
Yep.
whether it's trading or sports betting or poker or fantasy football, it's all about statistical analysis, probability, expected outcome.
Exactly.
And so if you have conventional thinking, Tim, when you made fun of Cody for drafting a kicker, that's like, you sounded like a buy and hold investor.
Is that right? The random walk down Wall Street type, just let it kind of fall where it is. I'm just saying you can't be the first person to take it.
Listen,
that's my opinion. I'm sticking
life
to it.
rewards the bold. Life rewards
Not always. Not always, says the smash frog on the road. Sometimes, not always.
Plus, why do you want to make your opponents better?
No, part of the fun is just talking trash. I get it. All right. They love me.
Like
I'll tell you what.
Golden Tate. Good pick, Tim.
I'll tell you what else was a good pick was when I called Bitcoin heading to 10,000. It hit 11,000 here today. We're going to start with Bitcoin now. Bring that chart up, if you will.
Did you take that trade off?
No.
At 10,000?
No, I'm trailing stop.
Oh, then you need to take the gift the market's giving you.
Well, I mean, momentum trades are really, a tough thing to know exactly when to take profit. This is the location where I would be scaling out of the trademark. I went long about 9,200. We talked about it last week. It's got huge momentum. What's going on with Bitcoin in this chart right here?
That looks a lot like the gold gap up last week. I mean, like when something gets hot, like we saw this with Boeing at the start of the year. You saw it with gold recently. You're seeing it with Bitcoin recently. When something gets hot, boy, I mean, it is one of those, like, just how much money do you make when you get in on some of those earlier signals, those earlier situations, and how you trade it in this situation. Listen, there's nothing wrong. And what Cody was saying there was, hey, don't be afraid to take money. Don't be afraid to take profits. But you also want to maximize it. And I mean, these are good problems to have, Tim. These are good problems to have. But when you recognize something, I mean, my goodness, look, you've been all over Bitcoin for 2 months now. For 2 months. And I feel, listen, I tell people to buy gold all throughout the year, and a lot of them didn't listen, and they're like, I should listen. I should have listened to you on this one, because you've been all over it for 2 months. And the trading signals have been there. The momentum has been there. So nice trade. And you've been all over this for 2 months now.
Well, I mean, the thing about it is I track it. And I didn't trade it for a long time. When Bitcoin was down there, stuck in the mud, underneath the 200-day moving average, doing nothing, I just left it alone. When it broke out there, I've been watching it. We've been talking about it on the halftime report every single day. And the signals have been there. There's no doubt about it. Cody, you ever play any Bitcoin? I know you did before your honeymoon. You actually paid for a part of your honeymoon with your Bitcoin profits back in the day. Is that right?
Yeah, that's true. I got it back when Bitcoin was, like $450. And then I think I cashed out at 15 or 1600. And that was more than enough for me to be happy, triple my money. But actually, I made a majority of it in Ethereum because I picked up 40 Ethereum at $10 a piece. And when those things, took off to a couple hundred each, that was the better trade.
See, that would have been a much better story if you sold it 15,000.
Oh yeah, seriously.
That is true.
So you need to work on your big fish ability.
Oh, my big fish stories.
Oh, let's talk markets. So we'll come back to cryptocurrencies and metals and all the other markets as we go. Start with the S&P 500 here, Mark. S&P is kind of just stuck in the mud up here at the top, but it is holding. You know, you've got an uptrend developing here. You've got an all-time high that we hit on the intraday on Friday. The futures contract now sitting at 29.56. Markets are generally slightly bullish. I think, in fact, on our scoreboard over the weekend, Cody, what was our ranking on the SPY? About 30, 35?
I think it was 30. Yep.
Yeah. Markets are slightly bullish. I think that's the accurate call. Is there anything in today's candlestick that's updating your opinion, Mark?
Yeah.
Not much going on.
Listen, if you've been around a while, you know that the summertime can be very dull. Volatility seems to drop. Volume seems to drop. Big traders are not doing as much trading, but really this week you could sum it up to anticipation of the G20. Last week we had that little lull before the Fed meeting, and then a little lift afterwards. And we talked about this previously, that there were two big upcoming events. In fact, I think we talked about it last Monday, on the halftime show. Two big events coming up: the Fed last week, G20 this week. And you saw that little lull before the Fed, and wouldn't it be surprising to see a little lull ahead of the G20 in anticipation of really the big storyline hanging over the market right now, and that is China-U.S. trade war talks.
Mm-hmm. Yeah, the trade war, China, U.S., and also the Iranian situation, obviously a little bit of tension there. I think it'll end up getting settled with economic sanctions, but you never know. When you start shooting drones out of the sky, usually the U.S. military and the president's not going to like that. I know there's a little bit of tension there, but he's showing discretion as we speak. Companies on the S&P. Go ahead, Cody.
So when it does come to the U.S. military, and the news has been saying, what's a equivalent retaliation action? And my thought is, equivalent? No, we need, they're going to poke us. We need to, do a big action back and be like, all right, and you're done. Go away. But sorry, that's just my 2 cents. I don't think sanctions are going to do much of anything.
That is a young man speaking who has not seen as much war or been through situations. I hope that is not the response. I hope we have a more moderate. Listen, geopolitical situations are always easy, but if you're,
okay. The way that he responded when the Syrians attacked the people, and he blew out, took out their airfield with 130 Tomahawk missiles, that was an appropriate response, because it basically said, hey, if you're going to use airplanes to drop chemical weapons on civilians, we're going to destroy all your airplanes, and we're going to do it in less than an hour.
And what did his base do immediately?
Oh, they loved it. No,
they did not love it. His hardcore base, because Trump ran on staying out of foreign entanglements.
Yeah.
That was one of his big foreign policy, stay out of foreign entanglements, going to focus on home. And no, they weren't terribly happy.
Well, I loved it, because I think showing strength sometimes is absolutely appropriate. Showing discretion is also appropriate at times. So, I don't know. But anyway, tensions with Iran, moving back to the markets.
Yeah. The reality is, and hopefully nothing does happen, we don't want to see escalating tensions, and hopefully they can find a diplomatic solution either through sanctions or other things and get Iran back working. Iran recently has reached out to their European partners to try to get some resolution. I don't think parties want conflict here, guys. There's a reason why, from an economics perspective. War can be bullish. It usually is a good thing for certain areas of the market. We'll keep tracking it. I just saw a headline that Trump was, going to hit him hard on sanctions. In fact, I saw that headline coming out just this morning during the market hours that he was going to approach it from the sanctions perspective. We'll keep watching that.
One of the reasons they're even flexing their arm at us is because they're sick of sanctions. And so I don't think giving them more is going to work. They've been using this appeasement strategy for quite some time, the same one that North Korea does, where they act out or they claim they're going to do something that they're told they're not supposed to, and then they go to the EU and they say, hey, give us some money and we'll go away. And then they give them money, and then 2 or 3 years later they do it again. It's appeasement, and I hate it.
Yeah. Well, I mean, we do have to have relationships with these countries in that region, though, Cody. I mean, right or wrong, I've been very, very opinionated about our relationship with Saudi Arabia for a long time. I have no problem, putting trade sanctions on Iran and putting more pressure on them. It will affect them. I mean, we have had sanctions on them for decades, and we did not go to war with them before. So I think we can avoid it with sanctions. Table it. We'll talk about it later.
But every military action is not war. This isn't just a black and white where everyone keeps thinking that, oh, if we do anything, any military aggression, we're going to war. It's like, no, that's not true at all.
Sure. But flying drones in countries and dropping bombs on them is not war either. This whole idea that you can stay perpetually in conflict without actually going to war. Table it, politics another time, not on a Monday morning. We got too many things to do. It is what it is. Markets are moving here, Mark. There are quite a few companies on the S&P I want to talk about. One of them to start with is BMY, Bristol Myers Squibb, if you would bring that stock up. It's down 7%. And, BMY, they were going to close a deal with Celgene, so they're going to start moving into some kind of blockbuster trade deal with them. Obviously, the acquiring company is going to come down here about 7%. Healthcare in general is grabbing my attention here. I'm looking at Walgreens Boots as well, or WABTEC actually, W-A-B if you would. I thought I saw WAG, but it is WAB. Let's keep looking through some of these bearish charts. Mark WAB next, if you would. Or is Cody running?
Sorry, which chart?
WAB. WAB.
WAB.
Another one of the bearish stocks on this list here, Mark, when you're seeing a red candlestick on volume and pressure and a downtrend at resistance, it's going to grab your eye for a bearish perspective, but you also have that rising moving average. What role at this point in a day does the moving average play for you? Does it have to clear it for you to enter something on the downside? How do you approach a situation like that?
Moving averages don't really matter when stocks are down 4, 5, 6%. In those type of situations, volatility is king. Intraday support, intraday resistance, on the downside, intraday support, that's the most important technical criteria when a stock has a big downward movement.
Mm-hmm. Yeah. I'm also looking across other bearish stocks. There are quite a few of them. Hanes Brands is down, HBI, if you would. We've seen this stock many, many times in the news the last couple of months. It's actually been under pressure at different times. HBI sitting on the 200 and moving average soup. It's got to clear through some of that stuff, but not a good candle for it today. Looking across other areas, I like this E-Trade potential breakdown. ETFC, bring this chart up if you can. It's kind of a stock picker's market right now. There's no doubt about it. Now, here's one where there is no moving average soup. You've got a very clear support level here, Mark, and in a casual fading downtrend, when the markets have been bullish and E-Trade has not, I would expect E-Trade to do well, but so much of their capital and returns actually just comes from capital under management. I'm sure with dropping interest rates, it can affect these brokers here, Mark, because they're not going to get as much money from the capital they control. What's your read on a chart like this?
This is one of the things, if you're a new trader out there and just learning to trade, first of all, we have the STEP system available to all pro members right now. And the STEP system and basic core trading principles involves identifying real clear support areas such as this for bearish trades. Mm-hmm. We call this a breakdown, breaking below that support level. Not quite there yet, but on the precipice. And if you're new to trading, like learning how to identify support, these clear areas of support, and then trade and come up with a trading strategy on how you're going to play this pattern is a great place to start. If you've never placed a bearish trade, and a lot of new traders have never placed a bearish directional trade, identifying a breakdown pattern such as this is a great way to start. Practice identifying, come up with a trading plan that can take advantage of this pattern because it's a beautiful pattern.
Yeah, for sure. There are other bearish ones that I'm seeing here, and it's kind of grabbing my eye first here on a Monday morning. Devon Energy, DVN, if you would. Little bearish retracement with a red candlestick pivoting. Not really confirmed yet, but I do like that situation. UPS and FedEx, the shippers here, Mark, today. In fact, UPS, I really like this setup quite a bit. As I'm looking across my watch list and what's going on in the S&P, to me, you had a huge rally back up into old support where the gap down was on their earnings. Now you've got a red candle here confirming below the previous candle. I like it here. I like it here. Now, for you, Mark, does it have to get below 100, below that moving average? Is there an entry here? How would you approach this?
These kind of complex moving average patterns, if you're new to trading, just avoid them. There's nuances here that I would put into play, but just from a teaching perspective, like these complex moving average patterns, find those support areas. Tim's bullish on Bitcoin, and then he's brought up like 8 bearish charts.
I just started there.
He's like, I'm bearish. I'm bringing up all the bears right off the bat.
Well, I'm feeling the market hesitate at a high point. So I think maybe that's natural instinct. I've already got long positions. I've got stuff that's bullish going in the market. You're up at a high point. It's not that I'm afraid of getting into new or initiating new bullish positions today. But I know from my portfolio, Mark, I got to add a couple of bearish trades to offset the delta. When you trade a lot, you kind of have to try to find that balance. It's almost naturally beta weighting your portfolio can be tricky. So I am looking for the Bears team. In fact, Cody, you said earlier, on our stock report and our option report, a lot of the Bears team candidates were the ones that were grabbing your attention. Is that right?
We have more Bears triggering from our picks over the weekend than we have Bulls triggering right now.
That's interesting. Gap, by the way, look at GPS. Even some of these brick and mortar retail stores, I am finding bearish candidates that are showing me some signals here today. We'll get to some of the bullish ones as well, but look at GPS down here at the low point. Another red candle down 3%, starting to fade. On the upside and bullish, you got Tyson Foods in a W breakout, about to break out of the high TSN. It's not one of the stocks I like to trade. Other S&P 500 companies, look at Deere. Deere is incredible. Talking tractors here today. Obviously trade war in May brought that stock all the way down. Earnings after post earnings, Mark. This is a good dividend paying company.
I want to start a podcast that's called Talking Tractors Today.
Have you seen that meme with that old farmer?
Talking Tractors Today. On the Trade and Justice podcast, Talking Tractors Today.
Trading tractors.
It is much.
We come from blue collar, tractor roots. So, I'm not saying that in mocking. That's our roots.
Correct.
Oh, I saw that picture Tim posted on, what was it, the clubhouse off the back porch of y'all's old house?
Yeah.
That was a beautiful view out in the middle of nowhere.
I drove a tractor before I drove anything else in life.
It's true. That old tractor Dad had, and it only had 2 speeds, dirt slow and then too fast is what it was. You could kick that one gear in. It was what it was. It's fun. I'll tell you what, though. I mean, talking tractors, this is the biggest tractor company out there, probably. Yeah, Deere. What's propelling this move here, Mark? I mean,
I don't follow Deere as closely as other stocks, but that is a huge momentum move into resistance. In an ideal situation, in this situation, is that you trade it sideways for a week or two at resistance, maybe 6-7 trading sessions, and then break out of that high. It's really, really tough when a stock has this much momentum coming into a resistance area to feel comfortable. I mean, that's moved up $30 in 3 weeks. So.
Yeah, it's been a V-shaped rally now into resistance. A breakout up here at the high is not usually one technicians prefer. They usually like a little consolidation before their breakouts, kind of like this JCI breakout that's breaking out today. Take a look at Johnson Controls, if you would here, Cody. Consolidation flat lets the moving averages catch up, lets all the MAs, then that time correction happen, then boom, you catch a little bit of a breakout. Those are more signals that technicians like, those high base patterns as a part of breakout.
That's a pretty pattern.
And Colgate, CL, look at this one, same kind of thing. If you're looking for a candidate that has not broken out yet, CL.
CL, I think you said CO. I'm like,
no, CL.
Yeah,
tip above 75. That would be nice. That is a clear breakout in a sector, Mark, that we're bullish on. We're going to go through the sectors here in just a minute. But Colgate Palmolive fits into an area of the market that's a little bit more conservative, right?
Sure. No, it's as consumer staple-ish as consumer staples get.
Yeah, there's no doubt about it.
Products that Colgate Palmolive makes.
Do I buy their products? Well, I buy toothpaste.
Well, what's their other products?
Well, they have toothpaste, they have lotions, they have shampoos. I mean, household products, stuff that everybody has to use every day.
Colgate toothpaste, Murphy oil soap.
Yeah.
What else do they? Soft soap, ladies speed stick, men's speed stick.
So, anyways, moving on to the market.
No, I'm serious, but like sometimes as traders, we forget what these companies actually are. When you talk consumer staples, because a lot of times people say consumer staples and new traders don't know what it is. I mean, consumer staples, these are some of the core products that we buy every day. They manufacture, they produce, and when markets get a little hesitant, sometimes money gravitates towards these less sexy areas of the market. And that's what's been happening with staples for many, many months now.
Correct. Yeah. I agree. And generally, when you have a rotation like that in the summertime, when the market's at a high point, it's common sense because conservative money is going for conservative returns. They just want to make some money and make sure they hold on to the profits they've built. Moving on to the Dow Jones Industrial, if you would here, Cody, YM contract. As I look here, stock, trend, pattern, price, all the different things that we look through. Obviously, we're up near the high point. The S&P hit a high point on Friday, but the Dow has not. We had the sell-off in May when there was the trade concerns. Now we have the rally here in June when you get this Fed, action coming in and lowered interest rates, and everything is now moving higher. Mark, we're above a pivot point in April, but we're below a pivot point from last October. How do you approach large cap stocks right now in terms of your rankings, your overall philosophy?
Oh, it's all sixes. I mean, everything's at or near or just above resistance on broad markets. So whether you're a little bit above, a little bit below, the same catalyst, like one market is just not going to take off here. The S&P is just not going to take off and the Dow not. And so wherever they are relative on these major broad large cap indexes, they're all at resistance. They're all hovering right there right now.
Yeah, some of the better performers.
And the G20 could be that catalyst this week that legs them up a little bit higher.
Sure. Yeah. And you're even seeing the same kind of action we saw in the S&P. Coca-Cola is one of the better performers today, KO. When I see KO running up the chart and hitting into a new high point, a dividend payer, very conservative company, this is probably the most valuable brand in the world in many regards from a consumer product perspective, Mark. These are dividend payers. When institutions are buying dividend paying behemoths like this one, it's telling me something quite a bit about the market. Johnson & Johnson, J&J, it is the day of lotions and hairspray. And
I just want to take a second on Coca-Cola. We back when Coca-Cola was at 44, go back to Coca-Cola. There was a week in the Traders Lounge back in February, March, where almost every day for our pro members, we were talking about that nice support zone it was at, nice value company like Coca-Cola, shifts towards dividend paying, shift towards conservative areas of the market. And, I know some pro members bought it, at that level. And it's nice. Those are the type of opportunities that we try to provide our pro members. So, but you can also trade it at the high too. I just love these companies when they're on those floor levels in that situation. Because, that dividend is just a lot lower up here.
I would agree with that. Obviously, relative as a percentage, when you're picking up at the bottom, which is one of the reasons why Intel is attractive to conservative investors right now, Mark, because you've got a good, stable, large cap company that pays a nice dividend that isn't at the high point, right, like Coca-Cola is. So if you are picking up a dividend on something like Intel, it's a little different philosophical approach right now here. Cody, give me a quick look at this chart, if you would. Now, it's not at that ultimate bottom like when we started talking about it about 3 weeks ago. Same kind of philosophy, though, right?
Oh, if you were in the lounge, and lounge listeners can say this, they will know on Intel, when it was at that bottom, I personally was advocating, I personally was executing strategies to attempt or to buy shares at that level for exactly that same reason.
You know, markets are flat here on a Monday afternoon. Usually when I'm in a situation like this on Mondays, guys, I just go through my prep. I go through my watch list. I get things ready. You're not going to initiate a lot of new Delta-based positions here mid-morning on a Monday, Mark. You're going to usually either wait for the close or wait for confirmation further through the day, but we're going to break down things one step at a time as we go. Move on to the NASDAQ, if you would here, Cody, tech stocks. And the NQ contract is down today, where S&P and Dow are very, very slightly up. Just a hair, pretty much the same pattern, in my opinion. You know, you have the V-shaped recovery, sell-off in May, rally here in June. If the market's going to catch a bid or a run above the all-time high, it's probably got to start with tech. Wouldn't you say, Mark? I mean, it's hard for me to imagine S&P at 3,100 without the NASDAQ kind of leading and running the way. Just a personal opinion. What's your read?
Unless it's a slow bleed upwards. Like if there's any sizable movement, it's going to take the tech with. I mean, if you saw the market flat, you saw certain areas like of the market, energy, that rally a little bit, you could see it slowly bleed a little bit higher. But as a general rule, the Qs are going to trade, you know, the same general formation as the SPY.
Yeah. You know, looking at across some of the mega cap companies, $200 billion or above here, Cody. And Cody, give me a quick read on these as we go. I'm going to bring you in on this analysis. Apple Computer. Instant reaction.
Juggernaut. So Apple, when it finally did find its floor, which, you know, right around that key support level, and I'll take this fib off. When it came down, hit that 170 mark, and when it hit that one, it's ever since then just been heading back to the top. So it pauses when the market does, and it hangs out. But it's looking like it might continue this run that it had throughout the beginning of the year. It did come down, hit 170, and then on that day immediately, people started buying. And since then, Apple's coming back up to the upside. It keeps making these little high bases and then moves, high base move. So if we get good news out of the G20 that things are going to go well, I could see Apple, you know, coming right back into 210 pretty quickly. And then after that, look for it as a breakout.
Look at Amazon. Amazon and Apple almost feel identical to me. I mean, I understand the analysis. It is a juggernaut, but pick your favorite. From a pattern perspective, there's not much difference in the subtlety here, Mark. Maybe a clearer target on the high side on Apple because it's been at 210 after the post-earnings gap. But, I mean, take your pick, in my opinion.
Yeah, I mean, Amazon's not a stock I actively trade because I usually do directional trades, and just a little too pricey for my blood, and I don't do spreads. So
other areas of these tech names, Google I still like as a bearish play. I was talking about this one last week. I like some kind of pair situation where I'm going short Google, long one of the other tech names, and take your pick, because I still see that as a bearish retracement. And they're the ones under such scrutiny and regulation. And if the market does sell, I could see, Google actually going to the downside. Even in a very small vacuum here, Google down 0.5% today, Apple up 0.25%, So you generally are feeling the market approaching Google differently than Apple or Amazon. Mark, what would you think of a trade like that? Long or short Google, long something else?
If you go to a 6-month or a 9-month weekly chart, Google just looks like in a sideways trend to me. And that's where I always start my trend analysis. Looks like it's a nice sideways trend. It's hard. It's hard for me to really get excited about much with Google, in this general trend. I've hated this pattern with Google for some time now. For some time now. Like you get little runs, and these little runs, it's a difficult stock. There's a lot of news on it. I generally like stocks that have a little less news on them than Google, than Tesla. These stocks where news can come up and create these short term. I mean, you saw that with Facebook. Facebook had a beautiful bearish pattern developing a couple weeks ago.
Sure.
And then a bunch of news.
That's exactly right.
So I'm just this morning, I was hearing that there's a bill that's being put forward that's going to require these large tech companies to actually put a price on what your data is worth. And that way every user, us will all know, like, okay, my data to Facebook is worth X amount of money, and they have to disclose that amount of information. I'm not sure whether that would necessarily hurt a lot of these big tech companies, but I definitely think it'll be interesting, if everyone knows what Google makes off of you.
It might actually help when people realize they make $26 off. You are quantified at $26.
Yeah.
I don't know that's going to have an earth-shattering ramifications on user behavior. So
I'm just curious to see what's going to happen. But yeah, when they say, hey, okay, this person is worth, $26. Oh, but this person who's got a lot of data going, they're worth, $200 to us. And it's going to be like, all right, this is a little Black Mirror thing where you're being ranked.
Yeah.
Even if they said you were worth $200, would that change consumer behavior?
No, people don't care. Are you kidding me? People do not care if you're stealing their privacy, if you're marketing to them constantly. They've moved on. Most people have moved on. The old guys like you and me, Mark, that complain about the concept of having our privacy rights violated. We bitch and whatnot, but then we get on our phone and we do the same consumer behavior as everybody else. Come on.
I don't complain about it. I'm just not interesting enough to worry about my privacy being violated.
Well, exactly. That's where most people feel. And even if you steal my contacts out of Facebook and then you sell them to some other firm, I know Facebook will get regulated and hit with a fine, but then I'm still logging into Facebook. The Facebook thing last year to this year is incredible to me when you think about the way consumers responded to that. You would think most people should have deleted their Facebook account and moved on with their life. They did not, Mark. In fact, Facebook data and Facebook numbers are as strong as ever. That Google chart, the reason why I see different kind of risk here is that you've got political risk. They seem like they want to go after this company in terms of antitrust, Department of Justice, those types. That's where the gap down came from, right? And now you have a backfill on the gap. The weekly chart, it was a really good call. Sitting on the falling 200, but the weekly
fact
chart
that we have this much news and analysis, go give me something with a lot less news so that when the technical pattern, because as long as there's not news, technical patterns have a tendency of playing out really nicely.
Yeah.
So
other companies
doesn't have all of this nonsense on, so I can just trade it without even having to worry about it.
Correct. Other companies grabbing my eye here. I'm going to go through a few of them, then get your comments on whatever ones you guys think are interesting. Match.com about to break out again. It's up 7.5% here today. MTCH, it's been a juggernaut this year. In fact, from January when we printed an open market in the low 40s, now we're up at $71. It's been a huge runner. There's no doubt about it. Other companies, TW.
And the thing about Match.com, and I've been an advocate of Match.com for long-term holdings.
Mm-hmm.
Throughout whatever the thing is. Whenever there's been sell-offs on Match.com, it is immediately rallied. There is a lot of people that look to scoop it up when it's came. It's really, really, really showing some really long-term signals that whenever it comes down, people scoop it up. Mm-hmm. Because this thing is, in my opinion, a great part of a long-term investment plan. It's a great growth stock. This stock is going to be, in my opinion, one of those $200 stocks 5-7 years from now.
Mm-hmm.
So,
yeah, I do like
the commodity.
What?
What was it last week? You were arguing that it should be considered a commodity.
It is a commodity. Love and sex is a commodity. It is a base requirement in order to keep the human engine running.
But Match.com is not part of that commodity.
Match.com, you cannot have sex or fall in love any longer unless Match.com.
Without Match.com?
They have to give you permission to do it. So,
yeah, they're the broker that deals the commodity. They're Cody. There's no doubt about it. So more like, but they've got to play in there. There's no question. Other companies that are grabbing my eye, Lululemon, LULU, if you would, broke out, pulled back. Now it's a little candlestick pullback. It's not ready yet, but it's definitely one that is grabbing my attention here. Dollar Tree is breaking its high point as well, DLTR. The aforementioned Facebook, just look at these charts, Mark. Bullish, 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 bullish. Facebook is approaching their high point. Dollar Tree broke out. That's an easy signal on Friday if you've got it on your watch list.
All retail stores one day will be dollar stores and Walmarts.
Yeah, Dollar Tree's been doing well. Those dollar companies have had a real run this year. We talked about Facebook, but then maybe one to keep an eye on. I was watching for a breakout one way or the other. I might have been eyeing the wrong side of the breakout, Netflix here. I was looking for a breakout to the downside if it broke below 340, 335 zone. It found support, it pivoted, it's running. In fact, I heard they had some movie come out on their platform over the weekend, and it had the most downloads of all time. I don't even know what it was. An Adam Sandler movie, probably. That's what they always release over there.
Murder mystery or something.
Jennifer Aniston and
Yeah, it was, Kelsey and I watched it. Was an all right movie.
But here's the thing: they can put an all right movie out there, and the front page of Netflix can get 50 million downloads in one weekend if it's the right movie. It's pretty incredible when you think about their subscriber growth and the raw fundamentals market. This has been a neutral company all year long. A breakout up here at 380 or even a breakdown, I don't care. You break out of this range that it's been setting for the year, I see trend potential. There's no question. Cody, go back to the weekly chart. The longer something is sideways, and Netflix is not going to be a sideways company for the duration of their life here, Mark. The longer something is sideways, when those breakouts occur, I usually see them as stronger signals. What about you?
It depends. I mean, there's a lot of factors. I don't like these charts, like where you have like resistance levels right above the current level. I mean, Netflix has been choppy. There's just no doubt about it. There's no doubt about it. You go back to Netflix last July in 2017. Now go to that time period.
Mm-hmm.
Like, no, July 17 previously.
Oh. Hang on, gotta move.
And we're just talking technical patterns here. When something is clean, and in this time period in July through the end of 2017, Netflix was clean.
Mm-hmm.
Cody's struggling here.
No,
But yeah, even if you go to a daily chart, but if you go to the weekly charts, if you are a new trader and have not enjoyed weekly charts, will you go to a weekly chart on Netflix, Cody?
All right, fine.
July 17th through that period. Weekly charts help filter out a lot of that noise when you're doing this broad analysis, trying to identify trends, identify support and resistance. Weekly charts really help filter out some of that noise. So, I mean, these kind of sideways movement that you had on Netflix that were very clean, very easy, not as choppy. These are beautiful breakout entries, in my opinion. These are the ones you love, you look for, respond well. And Netflix, when you have these clean entries, and that's not what you have right now with Netflix. You got a really, really choppy, ugly chart. So it's more of a fundamental analysis on Netflix right now. And, I just hate it. I hate anything on Netflix right now. I hate Iron Condors on Netflix. I hate anything on Netflix right now.
You hate Netflix. Did you ever use that gift card I gave you to let you binge watch some movies on Netflix?
Timmy gave me a $30 Netflix card for Christmas. I still haven't used it.
Haven't used a single dollar. I just wanted to.
I'm trying to catch up on all my HBO on demand shows, and I haven't got through them this year. So
I see.
I'm still trying. I'm watching Deadwood right now.
Well, they say content is king. By the way, that Deadwood movie was not great. I don't want to get into it right now, but I did not love it. I love the old show, by the way. I love HBO. HBO puts out a better product. That's the interesting thing about Netflix, quite frankly. They put out mediocre movies and they still crush it. What if they could actually get it right and actually put out really amazing content? It's going to be interesting. Let's move on to the RTY, then the dollar, then the commodities, and then the sectors here, guys. Let's keep working through the markets. Russell is neutral. Move on to the dollar, if you will. I don't see much there in the long-term range, just kind of stuck. Now, the dollar is bearish. Cody, I know you're my Forex guy. You track this quite often.
Oh, I'm absolutely bearish on the dollar now. So
what's your read?
It hurts to have to go bearish on the dollar. It feels very un-American, but you have to. So I actually, let me go to the UEP, because UEP actually shows a little bit cleaner of setup, is that what happened on the dollar is it basically made that head and shoulders pattern, broke below the neckline, and that's technically now why we're going bearish. Now, if I were to go back to the DXY, you can see that it's also breaking this 200-day moving average after the breakdown. So if the Fed moves forward and does cut rates, even in 2020, and the headline and the rhetoric is that they're going to cut rates, the dollar is going to continue to drop. So from both a fundamental standpoint of why people would be pulling money out of the dollar, and from a technical standpoint, we can't help but do anything but go bearish on the dollar right now.
Mm-hmm. Yeah, I agree with that.
Looking at dollar charts over the weekend, like doing like a 10, 15 year, because I'm a big fan of whether it's a currency or whether it is a commodity or whether it's an individual company. I like finding those long-term support levels so I can start my boomerang trade, which is the formation. And I was like, wow, we got a long ways to go even to hit like, you know, like go back to like a 15-year chart.
15 years. All right.
You know,
wow.
and like looking at some of those lower levels, I'm like, yeah, like I don't feel comfortable starting a boomerang trade up here.
Yeah.
Like, you know, like when things are in the upper range of its elevation, whether it's gold or oil or currency or an individual stock, I'll trade anything. But as far as like cash flow investing the way I do it, which I will be on Wednesday night in a Mind of a Trader, laying out how I do my boomerang trades.
Mm-hmm.
And I'll be doing that on Wednesday night for Mind of a Trader. But like, and so I wanted to look at the dollar. And I was like, yeah, you know, I'll start a boomerang trade maybe if it falls a lot lower, you know, because we're still in the upper end of the historical range.
When Bernie gets elected and forgives a $1.7 trillion in student loans, the dollar might come down another 30%. Did you see that headline?
Well, I don't know what crazy universe you're living in that you think when Bernie gets elected. I like how you just said that like it was an absolute. The day that happens, then we might as well be a communist Russia.
Now, listen, I love Bernie Sanders, the human being. I think if every human being was genuine and as forthright and as honest and as convicted as Bernie Sanders, and you know, with grace and all that, this world would be a great place. So I am a huge fan of Bernie Sanders, the human being. As
a human being, he's awesome. His philosophy on socialism is terrible.
Here's the problem. Well, many different problems. Number one, even if that's his platform, he's not getting that passed. Okay. So politics, when you see these headlines, they move the markets even at times. It's so silly because that's not going to happen. Even if Bernie did get elected president, Cody, he can't get his socialist policies through a Congress. It's not going to happen. So you don't have much fear out there in Hawaii.
Bernie Sanders is awesome. I want to be more like Bernie.
Yeah. Well, I think
I'm still voting for Trump in 2020.
The dollar can have a lot of move to the downside. There's no doubt about it. Not only through political policy or whatever might happen, but the Fed is just now starting to lower interest rates.
From the billionaires at the top.
Yeah. You're not a Bernie fan, Cody. Is that right?
You need to practice, have a little more confidence in that. You have something there.
Yeah, I got to work on it.
But there's some potential there.
Across the other currencies, I don't see a lot. I do see strength out of the yen, by the way. The Swiss franc, the safe haven currencies are moving up while the dollar is coming down. Move on to crude oil, if you would. CL contract.
Going to go through some. All right, let's look at the weeklies. Let's zoom in a lot more on that. All righty.
Mark neutral until otherwise. I mean, that's a symmetrical triangle, back and forth, back and forth, back and forth. What are you seeing?
Oil's an area where I feel comfortable doing boomerang trades a little bit lower. I talked about it in the commodities report this weekend. I anticipated, I mean, once again, it got its big spike on the war news. I wouldn't be surprised to see oil slide a little bit. So I'm trying to time my next selling of a put on crude oil. But you have a nice little support area. Listen, it's a pretty neutral market as a whole for oil right now as far as sentiment. As long as there is trade war resolution. Now, if you have an eruption on the trade war, oil's going to get hit, like a lot of different areas. But as long as the trade war, you're going to have sentiment pretty mesh, which makes a pretty good cash flow environment, in my opinion.
Mm-hmm.
Also, for all of the oil traders out there, you got to realize the OPEC meeting is tomorrow, I believe.
No, I think it's July 1st and 2nd.
I had it on the when I look at forexfactory.com, it says that we have a.
This is why you do your own research.
OPEC meetings tomorrow all day are on the economic calendar. It says they're usually held in Vienna twice per year. You've got to go to their latest release and see what they're doing there. I don't think it's
OPEC from CNBC to meet on July 1st, 2nd.
Yep.
On the OPEC website itself.
Yeah, Forex Factory's got it wrong there. Which
Very
could,
well.
yeah. So coming out in a couple of weeks, really, oil probably could have gone up more here this morning.
And that's the thing is, like, if you ever trust, and I just won't do it. Yahoo Finance can say a company's earnings date will be a certain date. The software on Thinkorswim can say that. You know what I do when I'm trading a company? I go to their investor relations. Like, because this is my money. I'm not going to trust Forex Factory with my money, for information. I'm going to go to the source.
Yeah, correct. Yeah, I mean, you got to double check this. And Mark, crude oil is something that you've been tracking and watching, obviously very close. Cody, you and I, we look at it every day as well. Guys, to me, where we are right now, boomerang is one thing, Mark, because then you take delivery or you actually buy it down at a discount. Going long here, though, that seems not technically sound. I mean, you're below an old pivot point. You're in a lower low, lower high situation. You've got mixed signals, little W pattern off the bottom. But Doji here coming into the week where there's not a lot of risk appetite here for the week, guys. I couldn't see a case to go long oil below 60.
Listen, doing a boomerang trade, selling puts at lower level is much different analysis than going long just outright right now.
Yeah.
I mean, you're absolutely right. I agree with you 100%.
Metals, gold, we keep burying the lead. We should probably just bring up gold, Bitcoin, and then gold first and second every single day, Mark. Just talking about these two. Obviously, it's rallying. You've got safety here. You've got a trend here. You've broken out of a 5-year high point. This is a momentum trade. And you have that FOMO situation fill in here. Because if you
it's a total FOMO situation.
Oh, it's complete. Yeah.
Yeah. Because if you missed it, you kind of wanted a piece of it and you're watching it now, right?
If you wanted some gold, listen, from the months of January through May, you couldn't hear me talk about how buy gold, buy gold, buy gold, buy gold. Everyone heard it, whether you're on a Trading Justice podcast, whether you're on the Traders Lunch, whether you were a random dude in the street that I stopped and said, hey, bro, buy gold. Like the thesis, and go read the Commodities report, which I reprinted 2 weeks ago on my gold thesis. The logic and everything on gold was there. It was set up to do this. And now it's going parabolic. And now you have people be like, oh, I need to get some. I don't know how to trade a chart like this, Tim. I don't know how to trade a chart like this.
No, you really can't.
My style of investing, it's more like when it's cheap, when there's value, when there's opportunity. When things just go crazy and people are like, I have to get some gold because it's going to go to 1,800. I don't usually go bearish on gold, but if this thing keeps up with its parabolic nature and then we get good news out of the G20, I can see this that's the coming thing. down pretty fast. The sustained, there isn't a case from a fundamental standpoint for a sustained move like this.
Exactly. Yeah. The extrinsic value is so far outweighing the intrinsic value itself that we're getting this type of movement. So yeah, I might.
Not surprising that you had some version of this, but for this to sustain itself, you have to have the dollar tank. You have to have the fear factors of the trade war and Iran stay. Those are the kind of the core things moving gold right now, other than just pure technicals and fear of missing out and that. It's not, in my opinion. I mean, listen, all I did was talk about buying gold. Now, if you are a short-term momentum trader, hey, you can do this, trade anything. Doesn't matter what it is. Doesn't matter that this is gold or Boeing or Intel or whatever the chart says. Short-term momentum strategies are one thing. But I sure as hell, I mean, once again, we could easily have reversals on all of these things. Dollar stabilize, even go up maybe. G20, trade war resolution, Iran situation, ease out. And then where is the sentiment? Where is the thing to take this just to the moon? Because that's what this move is like. It's like, oh, we're going to go to the moon.
Well, the dollar dropping, over the next year would take gold to the moon. A 10% move in the dollar has an exponential move in metals and commodities because of inflation, Mark. And if the premises are that the dollar is going to continue to fade like you guys are talking about. The idea that it has to have some deep correction.
Well, I didn't say the dollar can continue to fade. I said I wasn't willing to start a boomerang level at higher levels.
Yeah.
Other currencies are terrible. Listen, the fundamental long-term backdrop for gold is still outstanding. You have central banks that are extremely dovish, in our opinion, will continue to be dovish. We're just talking about timing right now. Mm-hmm. If gold stabilizes at these higher levels, the fundamental factors stay the same. And I'm talking from a long-term investing. Hey, even acquiring at somewhere near these levels might be a reasonable decision. But on these parabolic moves, trying to make long-term investing or cash flow decisions on parabolic moves, that's not the right time to do it.
Yeah.
It's okay if you miss out. There will be another opportunity down the road.
Correct. But if you're currently in a position taking profits just because of the high point
you're in the world of short-term trading when you do that. That's a whole different ballgame. And once again, it doesn't matter what the chart says. How do you manage these big moves up? Whether we led off the show with Bitcoin, we're talking towards the end of it on gold. When you have these huge moves up, how do you manage a trade like that? That should be the governing thesis, not anything else, because you've left everything other than pure momentum in these situations. And how do you manage a trade that goes with you in this situation?
I'll give you a great answer to the question. You add a stop loss to a put option instead of an actual hard stop loss. You lock in your profits through the guaranteed right to sell your product. If you own GLD and you've caught a huge move to the upside, you literally can hold a put. Cody, bring up GLD if you will. Because I think that one of the mistakes I see quite often with traders over and over and over and over again is they take profits on stuff they should not take profits on. That old adage, you can't go broke taking a profit, is one of the worst ones in the market, in my opinion. I hate it. I think that too many traders get stuck and lost in this. Well, I got to hurry and grab that $5 I've made instead of catching a trend at a core thesis that they've had, Mark. Gold is in a fundamentally and technically strong parabolic move to the upside. Anybody's guess on where that's going to come back. It could be tomorrow. It could be in a month from now. All we need to do is look at palladium last fall to see how a parabolic trend can develop and run for a long time. Would it surprise you to see gold on the futures market hit 1,500 in the next month, Mark?
Of course not.
No, not at all. We're seeing strong action here in gold. Cody, go to the trade tab and look up the leap option for the January put option.
Actually, go to the 21s.
Sure.
They're cheap. Put options on gold are cheap. You are about to be shocked at how cheap it is to buy a put option 18 months out in time.
2021, Cody. So
the 21s.
Yeah, Mark wants 2021.
We're going way out.
So instead of trying to fiddle with the short-term management, Mark, there's all kinds of different things you can do on the single legs and actually locking it in. If you bought GLD down at like 120, 125 on the breakout, you literally can lock in all of your profit with an insurance contract at the 133 for $700. Now you're leaving that 700
18 months
for 18 months. That way you can hold your gold. And if it runs for 18 months while the dollar turns over, there's all kinds of different ways you can lock in profits here. Put options.
No, I mean, you think about it. Let's say you bought it on the breakout and you literally could buy a put option 18 months out that locks in all of your profit. You could still cash flow that to the upside.
Yeah.
By selling calls for 18 months risk-free.
Well, that's that old simulated collar trademark where you own something as an underlying asset, you buy insurance, and then you roll cash flow.
How would you like to sell things risk-free for 18 months, cash flow? And the only thing you don't know is how much money you're going to make. If you had bought that little breakout 4 days ago, you'd be in that situation 4 days later.
Yeah, yeah.
This is one of the reasons I love commodities. And listen, commodities is an amazing place. It really, really is. Come join me in the commodities report more often. Because you have 100%. Each one of us have a common number. We all have 100% of our portfolio, different sizes, and not 100% of that is going to be devoted to equities at all times. You know, you have 100% out in bullish trades.
Here's a mistake I see traders make quite often is they start turning their core investments or position trades into day trades just because they're watching the markets every day. You have to stay in your lane. Gold is not that kind of product for most people, Mark. And this huge trend.
I do not trade gold. You know, I cash flow gold. That is how I approach gold. Plain and simple.
It's been a juggernaut.
Way that I prevent myself from doing that, my long term versus my short term, because I had noticed that when I first started trading, that I would try to swing trade some things that I wanted to hold long term. So I literally split my portfolio into multiple accounts and multiple brokers. That way, the one that I'm going to trade in and swing trade is not the one that I'm holding my long term stuff. So I have that mental or that actual block to help me from not trading things that I just need to hang on to.
Yeah, for sure. Yeah, I think it's a good idea, and it's a good way to make sure.
Where else? Go find something else that I dare anybody, go find something that in the last 4 days you could have a risk-free cash flow investment on. You know, I mean, these opportunities pop up in commodities a lot.
Correct. Let's keep moving through these markets. Let's talk sectors here real quick, Cody. And you bring up the sector and just give us the current yard marker rating we had on each one of them. Do you have those handy somewhere? You want to bring up the newsletter?
I do have them handy. And actually, I got my Word document here we could use.
Yeah. So kind of just talk about all the movement we made. You guys, we were meeting on Friday with our scouting report meeting. Mark, I loved the commodity report this week. And guys, if you love commodities and you are a fan of tackle trading and you're a pro member, you've got to check the commodity report out. Mark did a real deep dive on boomerang trades.
Well, I did the first part of the multi-part series.
Yep. You're going to be doing, I think, 6 of them or something like that. Is that right, Mike?
Well, I'm going to do it however many it takes for me to get all the words out of my head.
There you go. I like it. It was really, I enjoyed reading it, by the way. So I thought it was a really good start to that discussion and conversation. And we're going to continue that conversation on the podcast today. We're actually going to be podcasting about the boomerang trade. But before we do that, Cody, give us a quick rundown on where the sectors moved this week.
Things either stayed where they were last week or they moved in the bullish direction. That is the broad way that it went. The only thing that actually went in the bearish direction was the dollar, which makes sense based on, everything that's going on with the markets and the Fed and trade and all that stuff. It all makes sense. Everything basically moved up or stayed where it was. So you had things like your basic materials and energy that we kept neutral from last week. And that's just because the charts either look the exact same, we're still waiting on those movements, or we have something coming up that we have to keep an eye out for. So for instance, basic materials. Basic materials has the same high base that it had last week. We don't know which way this thing's going to break until it does. So we're basically looking for this thing to K trade. If it breaks to the bullish side, because it is a high base, then we're going to trade it that way. And that's why, we kept it at the neutral, but on the bullish side, 40-yard line. If you were to look at communications, we had one of the biggest shifts from bearishness to bullishness is obviously because, we look at it last week. Last week, it looked like a higher low was forming, or a lower high, where we came down, lower low, lower high, lower low, lower high. We were expecting this thing to continue that trend to the downside. Instead, it said, nope, I want to play ball with the rest of the market, move to the upside. So we had to then shift the communication sector bullish. Energy, as I said, it's just sitting right there. Neutrality. We need to figure out, what's going to happen with this. I think all of the coaches really just saw that and said it looks neutral during the meeting on Friday. That was one of the quicker ones that everybody's like, yeah, it's neutral. But moving on to finances. So the financial sector, sitting right there, it as well as industrial, they're both just very boring charts, to be honest. They have been sideways for a while. They're still sideways. They might get some movement to the upside if the market were to get some news, but both of them have been boring. I mean, could you say anything other than neutral looking at that chart?
No, No.
Continuing on to technology and staples. Technology, a little bit more bullish just because of kind of what we talked about with the NASDAQ, that if we get some movement to the upside, it should be one of the faster movers. We had that break above the 50, then a nice week of pulling back. So after that, it moved. Look for this thing to continue to the upside with some bullishness. Our staples, which of course is, we were pointing out Colgate and some of these other companies, they're just that. They're the staples. They're going to continue to be there. Now, Mark, you do a lot of dividend payers. Would buying the sector itself like this pay out a dividend?
A lot of them do, absolutely.
I just don't see any of the indicators down here because, I'm thinking because that's
I don't know
XLRE.
if ETF, because I saw this on XLRE. XLRE had their dividend payment. I don't know if Thinkorswim software registers ETF dividend payments, because I was talking to the coaches, because XLRE, one of the safest areas. I've been like an advocate of XLRE for going back 6 months, fighting ferociously for it and rankings and talking about it. And whenever it has a dividend payment like it did on Friday, you see a little bit of a slide. Like if you go back to like in April, like that little bit of slide. So like when it pays out a dividend, you can see a little bit of slide. This is normal. So I think there's a great opportunity coming up in a few days to get into some shares if you desire. And if you don't desire, you don't, but if you do, like getting into some long-term, getting into the trend, maybe if it pulls back to the old resistance level, that would be ideal. I don't know if you're going to go that far. It might not seem like it, but 63 cents is a big move for XLRE. So you might not get that far, but that's what I'm looking to add, just add another 100 shares to my portfolio. Mm-hmm. I'm a real boring. Like I am not an exciting investor these days, but you know what? My account keeps going up.
So I don't
lose any sleep at night. I like things. I think it's a really easy environment.
Trading's not supposed to be a fireworks show every damn day in your account. It's supposed to be boring, lazy cash flow, and you get rich slow over time by reinvesting and picking up these little things. Mark, I think it's exactly the approach to investing you should have.
As I get older, and I wish I wasn't such an action junkie in my younger years, and right. I had more of the mindset I have today. Find cash flow strategies. Find opportunities to acquire great companies when they're cheap. Find commodities when they get cheap. Take advantage of trends based on, nice, conservative, easy situation. Real estate to me and utilities to me have been the easiest call all year long. Yes, the markets went up as well, but utilities and real estate have been safe. This is where money's been flowing. It's conservative. These dividend-paying areas of the market, as long as bonds are going down, as long as interest rates are going down, these have been attractive. Now, there's going to be a point coming up where the dividend they pay just isn't as attractive because the dividend goes down, the yield goes down as the price goes up. So there's going to be a place where it tops out. But the great place to pick up great investments is not at the top. It's listening to us 5 months ago, listening to us on gold 2 months ago. Keep on doing it. And it doesn't matter if you missed out on gold, or it doesn't matter if you missed out on utilities. Guess what? There will be another great opportunity.
There always is.
Keep on coming. Yeah. Don't worry about the one you missed out on. Worry about the next one that comes up.
Plenty of candidates out there in the market. Cody, we got a couple more sectors, I think.
So utilities, very similar to XLRE, just safe, dividend paying. Mark just broke it down better than I could. Healthcare has, had been one of the more neutral sectors for quite a while, and now it's decided that it's done with its neutrality. It wants to be bullish and play along with the rest of the market. This thing continued just to make neutral wedge patterns throughout the year, and now it's broken this one that it had for a while. That's not a drawing tool. And when this thing broke, this wedge it was in, it's just been, one of the faster movers to the upside. So healthcare is joining the rest of the party. And then finally, our consumer discretionary is sitting right up against that resistance level. Got to see this thing move before we can even look at it. But until it breaks that 120 mark, it's there. It's going to sit at that 30 mark where we gave it.
Yeah. Yeah, as I'm looking across my watch list, just as we close the day here, S&P 500, give me a quick look at the ES contract, if you will, Cody. We're holding intraday. We're sitting on a little bit of a mini support zone. There's not much going on here up at 29.55. As I'm heading into the back half of a day like today, Mark, this is a day where you kind of turn the accounts off, you do theta stuff, you get ready for tomorrow, and you update your watch list. By the way, there's a ton of picks from over the weekend on the option report. We had 5 stocks trigger here today.
You want to know one of my guilty pleasures, Tim, in this
Sure.
market? And I literally do this. When things are boring, I sell a put on the SPY. I'm like, let's get this stuff going. Either this stuff is going to get interesting or I'm going to make some money for selling this put.
Yeah.
And so it's a win-win for me. It's either I get the money for the put or I'm like, this boring market stops and I can start having fun again. So that is one of my guilty pleasures. Now, there is no trading advice there. It doesn't mean it's a good idea. It's what I do. Sell a put on something. Let's get some action going. Or make some money for being bored.
Do you see any action between now and the G20? And then second question, follow up on that is, what do you expect from the G20? Let's start with
more bullshit.
Yeah. Cody, what about you?
Absolutely nothing. Bunch of headlines, but nothing.
I think we made talks and we're best friends. I mean, the same song and dance we've heard for a year and a half. You know, like, oh, we are now friends and we're making, until you see a resolution. And I sang this earlier this year. Until you see a resolution, until it's actually done. And I don't even know then if it's done. Look at Mexico. Look what Trump tried to do to Mexico. They have an agreement. I think as long as Trump is in office, we need to accept trade war volatility to some degree. I just think that's the reality. Trump is going to be a fascinating historical example. Like, I think he's underrated on his ability to get these other countries to do things. And he uses tariffs as one of his primary weapons. He's threatening Mexico. He's threatening Canada. He's threatening Europe. He's threatening China. He's threatening India.
I was going to say he's threatening India. It's any country that that he thinks is got a leg up on us trade wise, whether that be consumer products or countries like Mexico with immigration.
Let's not assume any of this is a good thing. Okay.
Well, no, I'm not okay. Good or bad.
Economically, I'm not talking politics. It's not about politics. We started this whole trade war thing back in February last year. The S&P 500 was where 2,900, 2,800 at the time. Without any of this garbage about the trade war, if you had every other economic condition, reality be the same, the S&P probably be at 32 or 3,300 right now, Mark.
Okay, first of all, I don't play hypotheticals. Where would we?
That is most likely. Without trade war news and risk of international economic disruption, the market would be higher.
No,
and a little blonde named Jamie said, yes, I might have some blonde-haired babies. You know.
The market did not come down on trade war news. The market started coming down when the Fed started.
That was in October, Cody, not in February. See, the whole thing disrupted this thing about a year and a half ago in February. And when that trade war hit, we dropped about 25%. It put the market into sideways consolidation, threw the Fed into a new tailspin. This idea that just because he's negotiating better contracts with trade is that it's been a good thing for the economy is not factually correct. Not if you're left, right, or
that's not what I'm arguing. I'm arguing that we need to accept that there's going to be trade war volatility probably throughout Trump's entire administration.
Yeah, as long as he's got his Twitter.
Whether it's good or bad is irrelevant. When trade war news, and this is the philosophy I'm under right now, as long as as Trump is president, you're going to have moments of volatility in the market.
Mm-hmm.
Buy those dips at some point from an investing. Start some boomerang trade. Look for reversals, look for something, because that is how it's going to play out time and time and time again. Until you see the other negative indicators. I mean, that's how Why am I going to try to be the smartest guy in the room and guess that the same pattern that's been going on for 18, or not 18 months, but 16 months is going to stop? I'm not. I'm going to bet that that trend continues, at least me personally. So
I am going to meditate and take a walk and try not to let my political views affect my investing, Cody, because that's usually a mistake. I've seen that many
would it surprise
times.
you if we
in my
have trade war
career.
volatility for the rest of Trump's administration?
Of course not. You're going to have volatility from news like this. In
How
fact,
are you going to play those dips when they occur?
same way I play them all the time. I'm going to boomerang it. I'm going to take longer term positions that are going to give me cash flow. I'm going to play out the volatility. I don't care who the president is. You know, you've got to build a game plan for the way you approach investing for the rest of your life. And you're going to have politicians and Federal Reserve chairmen come and go, right? And when the volatility kicks in, you got to know how to respond. When you have profits, you got to know how to lock them in. I think the tip of the day was on that gold chart. I loved that we went and looked at that leap option on gold as a way to lock in that profit. Mark, we got to wrap this one up here today. We're going to be podcasting on the boomerang trade. We also have some things going on at Tackle Trading this week with our pro memberships, right? Bear Market Survival Guide Mastermind Group tonight. Tomorrow, and in the chat here, guys, let's make sure we get a couple of these things. Put in BMSG tonight. Put them in the chat. Let me know that you guys know when it is. And then tomorrow, we're going to be releasing Module 4 of the STEP system. So type in STEP system Module 4 tomorrow. Somebody get those two things in the chat. Cody, did I miss anything, young man?
Not that I have. I actually have not even heard from Jessica yet this week, so we'll see.
Marky, what about you? Did I miss anything over at Tackle Trading? Things we got
this is a big boomerang. Like some of these concepts we're going to talk a lot about these. I mean, this is becoming a passion of mine, the boomerang trade, a true passion. It is influencing almost everything I'm doing on some level or another. And it really fits my personality. But I'm not an action junkie these days. I like slow, steady things, and I believe. But anyways, we're going to talk a boomerang trade on the podcast today. I'm going to do a boomerang trade, Mind of a Trader on Wednesday night. It is boomerang week here in my household.
All right, hey guys, what do you call a boomerang that doesn't come back when you throw it? It's called a stick.
So we need to come up with some clever analogy. We have the boomerang trade. Now we need to call the stick trade. Is the stick trade just when you lose?
Yeah, probably. And if it comes down and pokes you in the eye, then yeah.
Boomerang comes a stick, you're in trouble.
Yeah, if it becomes a stick, you're in trouble.
All right, guys. Thanks for joining us here on our YouTube channel. As always, each and every day, markets were flat today. We'll see what they're looking like tomorrow. Come back and join us. Make sure you subscribe and like our channel. We do this every day for a reason. We love trading. See you tomorrow.